You want to learn how to chart like a pro in 10 minutes? I got you. Now, let's get straight down to business. If you want these steps to work for you, then follow me carefully as I unveil this easy processes step by step. The first thing you want to look out for on your chart is the overall market direction. This is the lane block of your daily analysis. It gives you the clue as to where the market is actually moving to. And there are two ways to identify the overall direction of the market. The overall market moves in two ways. It's either it's moving as a trending market or as a ranging market, though we have the third movement called a choppy movement, which we will avoid if we want more profits and actually want to trade like a pro. I will tell you why we are avoiding the choppy movements later in this video. A trending market trends in two ways. We have the downtrend and the uptrend. The downtrend is when the market is selling more than buying, and an uptrend is when the market is buying more than selling. You know you are in an uptrend when you see a series of higher highs and higher lows. You will see the price movement focused on one direction on the chart, continuously and repetitively. In this case, moving up continuously. At this stage, the buyers are more than the sellers, and they have more momentum to push the market up. If you see that the market is in an uptrend, you have to pick a side. It's either the buyers or the sellers, but you should tag along with the trend and roll with the buyers. Trying to analyze the chart against the trend is a bad decision and moving out of opportunities. Traders who trade against the trend often lose 70% of the time. Be loyal to the trend until another one is created. And it's easy to identify the market as an uptrend when you meet it at this point or this point, but the problem is to identify it from the beginning. But it's no longer a problem since you are watching this video. There are 3 steps to it. You first wait for this, and this, and this, a higher high, a higher low, and another higher high. And after that you begin to watch out for the next moves that I will teach you soon, in order to get a chance to hop into the trend. When the market is consistently moving in lower lows and lower highs, we consider it that the sellers have more power than the buyers, and they are in control of the market. We call this type of trend a downtrend, simply because it is moving down, and it is moving down consistently. This way, we can find a lot of selling activities than the buying activities when the overall market direction of the market is in a downtrend. Your overall focus should be on selling the market and not in buying. You are only trading with the winning side. To identify a potential downtrend from the beginning, you have to pay close attention to these 3-step movements. It begins with a lower low, then a higher low and another lower low, and after that, you can start looking out for selling opportunities. And now, onto the last overall market direction, the ranging market. The ranging market is a period of market consolidation when the market is cooling off from a long trend movement. This consolidation is often found at the peak of a trend or between the trend movements, meaning that it can act as a reversal pattern or a trend continuation pattern, though they are more rare to see because the market is mostly moving in a trend. The ranging market is traded differently from the uptrend and the downtrend. To confirm a ranging movement, we need 2 highs and 2 lows. If we have only 2 highs and 1 low, it is not complete. We need them all complete. And when the market has provided us with those 2 lows and highs, we draw lines on them. Any other price movements that touches the high or low after the formation is finally complete, becomes a suspect. Now that we know the overall market direction, let's see how we can make very good use of these structures, take advantage of them, and flow with them to analyze the market and make great buying and selling decisions. Trading the overall market structure requires you to have a lot of great strategies in order to see the chart clearly from the inside of your mind. This is where the work is done, but I will reveal the best ones to analyze and trade with on your chart. When you are on your chart and you see a trending market like this, What is the first thing that comes into your mind? Yes, an uptrend. Because we can see a series of higher highs and higher lows, meaning that your attention should be more focused on buying activities than the selling activities. Everything we're doing here is to find opportunities where we can buy the market from. Since there are many other traders buying here, and we don't have enough money to push the price against them, of course we are not the hedge funds and central banks. Flowing with them is the best option. And in order to flow with them, we need to clear out some noises from the chart and get our mind fixed on those areas where we want to trade the market with, making sure that we are actually focused on the real deal. And to do that, we begin to deploy some trading tools to the chart to access a more clearer view of the price action. And one of the best ways to clear and analyze the chart is by drawing a trend line on the higher lows of the uptrend movements. The trend line does not only give us a clear view of the chart, but also show us the next area to enter the trend. When that has been done, we begin to look out for opportunities. Let's imagine that we drew the trend line only when the market was at this point, before these new price movements. How do you think we could have predicted the market better to engage in easy buying activities? Well, the first way to analyze trend opportunities is to wait for price to touch the trend line, and you will expect to take your trades from it, using specific entry candlesticks that I will be showing you after this trend structures. Now, the second way is by analyzing with the support and resistance levels using a horizontal line trading tool. The support and resistance can be used as a strategy on its own or combined with the trend line to make a stronger analysis. When we use the support and resistance in trending markets, the best way to utilize it is by taking on a strategy called the pullback strategy. This is when the price breaks the resistance level and then returns to the point of breakout to take the market higher. The psychology of this strategy reflects the current state of the trend, which is an uptrend, that the buyers will keep winning over the sellers, thereby causing it to break the resistance and convert it into a support line, so that when the price returns to it, it picks up the remaining buying orders and moves the market further in the favor of the buyers. We also analyze and trade the market using the breakout patterns. Now this is what you must know. The breakout patterns works best when they are happening around a support or a resistance zone. After a strong push from the buyers or sellers, depending on the trend, and in this case from the buyers, since we are in an uptrend, a lot of traders don't know that. But now you do. Now, you are one step ahead, and doing this helps to stop a lot of false breakouts. There are two types of breakout patterns. We have the rectangular breakout patterns and the triangular breakout patterns. The first one, which is the rectangular breakout pattern, moves as though it's in a box or in a small range around the zones. This pattern is expected to break out from one of the zones of the box, and since it's in an uptrend, and just like I told you earlier, we are expecting a breakout from the top. Don't place your buy limits on the boxes like other traders do, so that this and this does not happen to you. Always wait for a clear breakout candle like this or a quick retest on the box before thinking of taking the trade. Same thing goes with the triangular pattern, but just with a little difference. The triangular pattern forms a kind of triangular shape, and the market is expected to break out from the top of the triangle, respecting the trend. This pattern will only be traded when there is a retest after the breakout, and from there, we can take the trade and enjoy the ride of the trend. This pattern can come in different shapes and sizes, but they all move in triangles and can be easily spotted when you filter them out with your lines. And now, like I promised, these are the entry candles I expect to see when trading the trend lines and can be used effectively for other patterns. They involve the pin bars, the bullish and bearish momentum candles, the evening star, and the morning star candles. These patterns are very effective for trading with the trend lines, the support and resistance levels, and other trading patterns and strategies. They give you a clear information of what is actually happening on the chart. And this way, you can clearly understand the real intention of the market before placing your trade. If you combine the overall market structure, the patterns, and these entry candlesticks, you will start trading the charts like a pro. And in order to go deeper into these patterns and more trading strategies to elevate your trading games, check out our high profit trading strategies in this playlist. We are the Trading Tribe. And it's a wrap for this video. See you in the next one.